Ah. ఓకే, ఎట్లాగో మీరు పంపిస్తారు కదా, పర్వాలేదు. ఓకే. Hi viewers, how are you? Welcome to Your World with Prakash Kapila. So this episode, as promised, I have a very important subject to discuss. Last time we discussed about the global trade because of Russia-Ukraine invasion. So continuing on that mode, we are now going to talk about global recession. So right now, there have been the biggest news we have right now is Powell has came up. Powell, who is the Fed chair here, has said that he's going to increase the federal rate for at least 5 times with 50 basis point. So what is a basis point? If you don't know about that, basis point is 1/10 of 1%. That is 0.01%. So 50 basis point is 0.5% increase. So when the Fed rate gets increased, all the rates that the banks operate on, the treasuries, the yields, all of that will get affected. So when the Fed rates keep on growing, it means the borrowing rate for the banks and for the people and in general will increase. So when people, I'll give you a very simple example of how this inflation will affect you. Say you have $110, right? You are buying, say, 10 goods worth $10 each. Previously, without the inflation, if the inflation was at 1% or 0%, then you could have bought 10 goods, all the 10 different goods with this $110 and still have $10 in your hand. So if the inflation is at 8%, right now it has gone to 8%, what it means is every item that you're buying is more costlier by 8%. So when you take 8% of $100, then you get $108, which means previously you used to have $10 in your hand. Now you only have $2, and you have not changed your purchase pattern. You have not changed your buying pattern, but you still get these things. So with that in mind, we'll go more deeper into that. So with us, we have Ravindra, and he's from Bay Area, Silicon Valley. He is one of the Silicon Valley guys. So he knows, he understands how the semiconductor industry has been affected. And okay, you can start off, Ravindra. Please.
Yeah, it has inflation. I have seen here before the eyes, Prakash. So initially, like 1.5 years back, whenever I walk into any groceries and try to buy Arisellu, right? One box is costing $4.99, and right now they are selling at $7.99.
Double.
Almost. Yeah, almost. Yeah. So instead of $5, I have to pay $8, like $3. It increased for the last 2 years, I can say. Not only here, even because for the house cleaning, whoever we request, right, whoever comes for help, they are also asking for more money. So inflation is reality. It all stick everywhere because of this COVID, and the US government printed a lot of money, right? So more money was circulating in the market. So obviously the prices went up everywhere in the Bay Area. That I can see very clearly. So that's the taken, Prakash.
Okay, so in your work environment
right.
and in the job market there, do you see any drastic inflation? What is your take? Are we in recession? Are we in
I think we are in recession,
Okay.
Prakash. The main reason I can say is because during the COVID times, the government is printing dollars and distributing to the people, right? So there are so many. If you remember, the stocks and all, they went up like crazy in 2021 yeah, because of the free money people are getting. And then people have no work to do right outside. They are busy, busy in the WhatsApp groups, and they say the technology is going up. So the Zoom stock has went up. Then all the technology stocks related to Zoom with a lot of rumors, it is doing good. So every stock went up. People made money. People are happy, right? All good. But the thing is, once the government stopped sending money, now they have to go and find out jobs. All these high-profile stocks, they are coming down. That's where currently the stock market is also going down, right? This is a very clear signal that everything is not good. So I feel there would be a recession in the offering. May not be a serious one, but you cannot ignore it. There are signs. There is elephant in the room. We need to acknowledge it. There is some recession. That's how I'll put it.
Oh, okay. So
even
yeah.
layoffs also going on, right?
Oh,
Wells
is it?
Fargo,
Where do you see layoffs in the
yeah,
Silicon?
yeah. Wells Fargo has cut down on mortgage teams, right?
Okay.
They had like I think maybe 300 people, and also Zoom did it, and at least some I come across some 10 company names. They are doing layoffs right now. So all
Carvana
mortgage
has
related,
done. Yeah,
right?
Carvana
Right.
has done. Twitter has stopped hiring more
I
people.
think yeah.
Yeah.
Even in my company where I work, they put a hiring freeze for some teams, not all teams, but at some teams.
So when you have to hire someone, right?
Mhm.
What is the questions that your management is asking you?
Hmm. Ah, the first one is they need more justification now, Prakash. Not like before where they will approve it. So it has to go up to the EVP, SVP level for any hiring, not just VP. So they are asking why this particular position is needed. If it is a full-time contractor, consulting is okay, but full-time, and not only that, consulting to full-time conversion also now it is taking more time. Previously they are liberal, now they are asking more scrutiny on why we need to have this position as a full-time. So all these things I'm seeing in the last 1 month, I can say.
Oh, past 1 month you're
Last
seeing.
1 month, I can say.
Yeah. Oh, okay. That's a new trend that is started. Okay, that's good.
Right. Right.
So, yeah, why I'm saying this good is basically because the labor statistics are saying that for every 2 jobs, there is only one person to do the job.
Oh,
And
really?
yeah, 1.9 is the thing. So obviously, there will be companies that how the hiring process happens is the companies will think about 6 months down the line, 8 months down the line, 1 year down the line, and then start the hiring process. If they think that if there is very uncertainty, then they will stop the hiring. Hiring is the first thing that gets affected. So if you look at the hiring process, then you can look at the trajectory of the recession. Basically, recession, the blind thing for recession is no jobs. If
Right.
jobs are not there, you are in recession.
Yeah,
If
means
a lot of jobs are there, you are not in recession. That's the blind
no,
thing.
it's a fair point, Prakash. I agree with you. So here, what happened was during this COVID, right, when government is sending money, right, because I used to live in a rental house, I used to get the checks for the previous tenants. So I have
Okay.
seen them, everybody getting it. So a lot of people, they moved to remote places, Prakash, and they
Yes.
were not looking for any positions as well, for any jobs.
That happened for like 1 year only. Now it's not. Now
Now
they.
everybody is back, back to work.
Yeah. Now the money is not going there.
Yeah. Okay.
So that is the
Okay.
reason why, and even after getting, like you said, people have, the basic thing was once the COVID hit, they couldn't go to their jobs for like 3 months. There was no way that
Right.
people, even the money was not passed in the Congress and the
Right.
Senate. So
Right.
they didn't know whether they'll get the money or not.
Right.
So that's what I mean. I'm talking about
Yeah.
average worker who is like earning $15 or $10
Right.
wage earners. So for them, it has stuck very hard. So
Right.
therefore, when they got the money, like $1,500 a month, I believe,
Right.
$15 a week.
Right.
Week for few people it's a week, for few people it's a month.
Right.
So when they got that much money, they didn't need to have any
Right.
do any work, and this continued for like 1 year or 1.5 years. And we are talking only about US, not
Yeah. That's the
not
main
about
reason
any other.
for all these penny stocks becoming rich, Prakash. Everybody got money, lot of time. They were in some WhatsApp group, whichever stock they advertised, and immediately they brought it up, right? So that's the whole game. It was
Yeah, like
played.
AMC and
Yeah, yeah, AMC.
GameStop
Right.
and Robinhood came into the markets, and
Right.
it also started. So
Right.
yeah, a lot of what in financial terms we call new entrants as retail investors.
Right. Right.
Okay, so these retail investors, there a lot of people started
Yeah.
doing investing, and
Right.
the retail investors started bumping up the stocks, so much so that even the
Right.
hedge funds loss of money.
Correct.
Archegos
Correct.
Capital, which we talked about before.
And second factor, Prakash, even the interest rates going up also goes against to the this one, because now for a common man, he would rather rent the house than a buy house, right? So mortgage industry is where some layoffs happen because they do see some foreclosures. So that's what my friend who is in the realtor business, right? He was saying people cannot afford it.
Which
They were moving
market
the
though? Is it San Francisco or
Yeah, yeah, Bay Area, Bay Area.
Bay
He's
Area?
here
Okay.
only. Yeah, means it is not like a very number like 2007 or 8, but they do see some foreclosures happening here and there. But still, banks are happy to take them because they can always sell them
Resell it.
because yeah, they can resell it. But there are some signals around because, and second thing is, even for you have to buy a house at a higher price, especially in Bay Area, and your monthly mortgage also for a normal house you have to pay like $6,000 per
But
month.
average salary is also like 250K, right? If I'm not wrong.
Yeah, you are right. And also see, many company stocks are almost 40-30% down in the last few months, right? So their pay up potential in the future means it will shake your foundation on which you bought the house, right? From the moment
Confidence
confidence
level
levels
will.
will go down,
Yeah,
right? Little bit.
that's true.
So that is, and this interest rate hike will percolate to other segments, right? So other areas and also,
Yeah, I have one thing
yeah,
about these interest rates.
right,
So see, when Fed increases the interest rate, there are three major things that happen. One 10-year bond, the other one 2-year bond, 10-year bond, and 30-year bonds. These are the treasury bonds that
right,
all of the world, all the central banks, they don't buy interest rate. They buy these
right,
bonds, these
right,
treasuries.
right,
So when I compare this is very paradoxical. So when the interest rates increase, the bond rate should also increase.
right.
But the interest rates have increased, but the bond rates have decreased when you compare it with the 2018 level. So 2018
Hmm.
level,
Is the peak,
the
is the high.
3.5 was the interest rate, 10-year interest rate.
Hmm.
And the 30-year also was close to the, I mean, it will be a little bit more. So when I compare 2018 rates to the present rates are lesser than 2018 rates.
Yeah, it's a
And that
paradox.
is,
Yeah,
it's a very big paradox, right? At the 2018, the Fed rate was not that much,
correct.
but the 10-year, 30-year, and 15-year were not low. They were
Correct.
like more than 3.5%, 4%. If you are trying to refinance, nobody was giving you the interest rate for less than 3.5% or 4%.
Right.
Suddenly, 2020, I think the rates have fallen like anything. And
Right.
2021 was the pivot point where the home rates have come down to 2%,
Right.
1.5%. A lot of
Right.
people.
Right. Right. A lot of people refinance at that time. 20. I think last year is the last window you have,
Yeah,
like up
yeah.
to this December. I think now I think by 2026 onwards, you need to pay more interest rates. They are going to increase the interest rates. So who will pay
But
the
if you
American
are
debt? Right.
if you
It
have
is.
locked in on the rate, your interest
No,
rate
no.
will change.
Mortgage is fine. All I was saying is on the our tax rates and all, right. As of now, they have parked it up till 2026. After 2026, they will recheck on our on our taxing
Tax rates,
brackets and
okay,
all. So
okay.
it is going to go up. That's what a lot of people say. Even I believe it will go up from 2026. So do all good things in the meantime.
Whatever you can do if you have money.
Whatever you can do. Yeah.
So yeah, so in the global recession scenario, we
Right.
have countries like China, Russia, India that are the major and EU that are the major players right now, because China and India constitute like $3 billion, 3 billion, 2 billion,
Three.
no, 3 billion people,
Right.
right?
Yeah.
1.5 to
Yeah. Yeah.
1.6.
3 billion
3
comfortably.
billion
Yeah.
people out
Right.
of total 8 billion,
Seven and a half or
7,
something. Yeah. We are 40% of the whole
40%.
population.
China and
Yeah.
India is a 40% of the total world population.
Right.
And anything that happens to these countries will affect the world
Right.
directly or indirectly.
Right.
So what has happened in China, or China is in a recession right now.
Right.
It may even go into
They have created a big real estate bubble,
yeah.
and that's the main thing. And even if you look at historically also, the same thing happened in Japan some 20-30 years back. And also I don't remember, some other place also went through, like they created a big real estate bubble and they did not find any buyers and finally it collapsed. China also same thing is happening right now.
And
So
the government is not, it is a the government company created the finance for a lot of real estate guys to build
right.
cities where
Right.
nobody can afford to live.
Right.
So previously what used to happen around 2000, from 2000 to 2010, or no,
Right.
sorry, 1990 to 2010, what
Right.
used to happen is cities were built and then the companies were also built.
Right.
So China invested a lot in whether you whether it's People Bank of
It may,
China, CIBC.
yeah, the main thing is this is how you should see, Prakash, in any country's GDP, right? Assume that there is one island and nobody built anything, then the GDP of that island is zero.
Zero, zero.
Okay, but on the day you create a one road or some action, immediately they will say some GDP is there, right? So China, so far they are able to create artificial that growth by doing this, building these cities and over again. And the main issue with the communist portion, right, to the democracy or to the American side, right? In American side, they let the whole company fall. There won't be any government which supports that. They feel it's the company's executives, they should see the reality and do stuff. Whereas in the communist Russia or in the China, the main thing is the government will take care of constructing these things. So that's where it is like you are riding on a tiger, so you don't know when to get out. So
When the
that's the
tiger is
problem.
going to kill you, yeah.
Right. So that's the main thing here.
But in China, recently what happened is they said we are not going to support. All of a sudden, see, the markets is all about confidence, is all about forecasting, right?
Right.
If I know that okay, someone is going to give me 10 rupees or $10 over a period
Right.
of 10 months,
Right.
then I know that I have $1 with me, and I can spend $2. I
Right.
know how to
Right.
get back
Right. Correct.
those things.
Correct.
So
Correct.
if I don't know that I am getting those $10, then
Yeah.
I'm like, okay, let me keep
Hold
whatever I have.
this whatever you have. Right.
Whatever I have, I'm going to hold.
Right.
And I'm
Right.
going to say that, okay, I don't have money.
Right.
Whatever is the case, I don't have money. I can't do anything.
Correct.
So like that, what happened? The investment in China came down to standstill.
And
That is one factor.
second
Yeah.
factor, Prakash, China versus India, if you compare, right? China's GDP is more of not just this, and second thing is their exports driven. So
Export-driven economy.
exports driven economy, whereas India's GDP is more internal. And second thing is India's GDP is 1/5 or 1/6 of China's GDP in terms of economy. So even if it recession, right, China impact will be higher on the, you perceive more on the world side than India's side. So
Of
that
course,
is
of
one,
course.
that is another point.
Yeah. So apart from that, what happened is there is another thing called lockdown. So what
Right,
did China do is like all big cities, all companies, big cities, everywhere, there
right.
is no economic activity.
Oh
It's
yeah,
zero. It
yeah,
has to be. It had to be zero for
right.
like 1 year.
Hmm.
Now what happened is the China exporting companies are not able to export. Till
Right,
now, the world was okay because people stashed away as much as they could.
right,
That they called with the demand forecasting, right? So instead
right,
of
right,
buying 10, you
right,
would buy 100 or 200 and
right.
store it in your warehouses.
Yeah.
So till now, the warehouses were okay. Now there is
It's all over,
this.
Prakash. I
It's
would
all
like
over.
to come to this point because I built my house, right? Like 1 year back,
Uh,
for the shower panels, I used to pay $299 or $249. When last time I went and checked, they are at $599 flat. So they
oh,
just doubled in 1 year.
double.
The reason they were saying is we ran out of all supplies from all the warehouse. Now that's where the prices went up actually. So you have to
True.
pay more money and get it's all because of China's that lockdown and all, right? So
Lockdown.
they are not
And
selling.
even cars have increased like anything.
Right.
So at one point of time, yeah, I'll share the chart.
Yeah.
So in the inflation perspective right now, how it
Yeah.
is if you are buying a new old car, if you are going ahead and driving the car for more than 300 miles
Right.
on a weekly basis,
Right.
then you are seeing a lot of inflation because you have to put a gas, you have to drive a car that's not giving you a great mileage and all
Right.
those.
Right.
So that is going to actually affect the purse, I mean, finances on a
Right.
day-to-day basis. Because
Right.
you have to
Right.
go daily you have to put the gas, daily you have to go, the
So you
bills
are
won't
actually
stop
driving
coming.
the economy, right? If you are not taking your car out, means obviously that stops, right?
Uh,
The moment you are outside, then obviously you are creating GDP by to the country, right? On
in some
many
way, shape,
many
or
in
form, you
some
go
way,
and
some
buy,
shape. Yes.
you go and buy a coffee, you go and buy
Right.
sand.
Right.
Small things have a huge impact
Right.
because it's all about number of people and the price that make
Right.
up the GDP.
Right.
So
Right.
if you are, if like 1 billion people are buying Starbucks,
Right.
then you have around, or 1 million people buying 100 times the Starbucks,
Right.
which is not
That's
a
it.
huge this thing, but
Correct. Correct.
that happens. So
Correct.
that is going to give $1 billion the
Uh,
GDP.
right.
So my take on this is, I think we are getting close to the thing. So let's complete. Yeah, I think we just have around 2-3 minutes.
Yeah. Yeah. Sure.
So my take on this is we have around, there are 5 things that happened in China that literally made the whole global economy dwindle like a
Shake. Yeah. Yeah.
shake.
Correct.
Yeah, definitely.
Correct.
One
Yeah.
is the industry got shut down. So
Mhm.
your cars, your chips, your raw materials for the fertilizers, your
Right.
anything, any shape or form, anything that you have as a raw material coming from China, it has
Right.
stopped.
Right.
So that was the biggest blow. The other thing is the oil has
The gas.
the gas and the
The
oil.
Ukraine Russia impact, right?
Uh,
Yeah.
but in China, what happened is they, because of the shutdown, the gas and oil have not yet hit the market
Yeah.
like it should hit. So
Right.
that's a, that acted as a counterbalance.
Right.
Number two. And
Right.
number three is the pent-up demand that is there
Right.
across the world has suddenly started, showing itself up.
Right.
So even in China, you see a lot of where there is no lockdown. Only lockdowns are happening in Shanghai, Beijing, and all crowded cities, but not in the other places.
Right.
So those places, the transportation and travel are like picking up like anything.
Right.
So why a lot of counterbalancings are happening. When the interest rate is going up, but the bond yields are coming down, the effect is not that much. So therefore, the currencies are not actually.
No, US dollar emerged the strongest in the last 1 week, right?
True.
Because of, yeah.
I'm saying the real impact is not felt yet.
Not felt yet. Correct. There are still signals. I think we did see these kind of signals like 3 years back, 5 years back also, right? See, US did not face any recession in the last, you can say 12 years, right?
12 years. 12 years boom is there, and that boom will continue. So for me, global recession is basically, even though India and China are like 40% of the population,
right,
when it comes to economy, 50% of the economy is US and EU, European Union.
Right, it is more than that actually.
So with the European Union, except Germany and Holland, all other countries are now not dependent on Russian oil.
Right.
Germany, Holland.
Everybody is moving out of Russian oil thingy actually. So finally, this whole thing will be centered at Ukraine and Russia only, right? Once people's dependency goes up.
So so people have figured out how to circumvent the Russian oil. Okay.
Right.
So the impact of Russian oil that people thought would be very humongous is not panning out. It's people are able to manage with 1 million barrels per month being pushed out.
So somebody's loss is somebody's gain, Sharath. So obviously,
here it's
Russia. It's a complete loss for Russia, actually, right? It is
Russia. They say recession is like inflation is like 30% now.
Yeah. Correct.
So during 1990s, like a lot of the people don't know about it. During 1990s, the imports to Russia were zero. When Soviet Union was falling, Soviet Union fell because of these high inflation. Gorbachev was saying we have rockets to go to the moon, but not underwears to our
people,
kids.
to the citizens. Kids.
So therefore, that kind of scenario has come to Russia right now. It all depends on how long the war will go. So Russia and China are definitely in a big doldrums. But the other side is India is able to catch up a little bit of China demand. I mean, export demand. The wheat is one big demand that has gone up, and IT is also
They are picking up again in India. So things are now they are coming back to normal, Sharath, in India. So this
right. So the other thing is why I think recession is not in the cards is basically one biggest indicator is for every job there is no person here. Only for 2 jobs there is one person. So the wage, even though inflation is up, the wage inflation is what is more important. When people are earning more money, and they don't mind spending a lot of money. So from tour, like he said, I was paying $3.99. Now I'm paying $7. So $3 to $7 is nothing for a person who is earning like even 100K. Now he's earning 500K. That's a different issue. So for average person, the effect of inflation is not yet seen, except for those who are driving for long distance. With COVID, that kind of job
the thing is in America, the food is very cheap, right? So obviously, people, the hunger index and all is very low, right, in the US. So that way, even you don't feel people having issues with their inflation, Sharath. So what you said is very correct. People can still afford, right? So yeah.
So closing remarks, Ravindra.
There are signs for recession. I do believe there will be a recession. At least some correction will be there in next 4 to 6 months. That's what I feel. But unless, but as you are saying, there is no recession, right? So let us see. Let us wait. I hope there is no recession. So let us hope.
Okay, folks, we have selected a topic where we, even if we do it every day, still there will be new things coming up on this. So
Right.
we are out of our time, and we'll be back with a more interesting topic or equally interesting topic next week. Thank you
Yeah.
so much for being part of our show. You have a wonderful day. You have a wonderful week
Yeah.
and
Yeah.
weeks ahead. Thank you. No
Thank
recession.
you so much for
No
having
recession.
me. For having me in this excellent meeting. Thank you so much,
Yeah.
Prakash. Yeah.
All right.
Bye.
Talk to you.
Yeah.
Bye.
Yeah. Bye. Bye.